All right, let's talk oil now. The OPEC meeting last week, cutting production by 1.2 million barrels per day. Oil rallied about 4% when it happened. Well, guess what? It's now giving all that back. But our next guest says the crude crush is coming to an end, but there are a few names in the space to play for a bounce. We're joined now by energy expert Mike Kelly, head of E&P research at Seaport Global Securities. Mike, listen, you and I got to stop meeting like this. I mean, oil is all over the place. Yeah. You've been digging into the stocks, though, that you like. Are there names that you cover, and you just put out a big report, I think it was last night or this morning, that can do well even if oil goes to 40? Are there names out there that can do it?
Yeah, even if 40 is pressed and things change at 42, cost to drill, frack a well comes down too. So that'll benefit you. But today we put out a report that said, all right, what can guys do in the $50 environment? And there's only, of the names we cover, there's 7 that really generate free cash flow and give you decent growth. I mean, I think if you...
At $50, there's 7 mid-sized E&P companies, yes. Permian-based primarily? Primarily,
yes. Yeah. So, you do yourself a world of good if you just buy Concho, Diamondback, and then a little gas exposure with Cabot oil and gas too. So you buy those 3. Those are
Concho, Diamondback, the original Fang, and Cabot oil and gas, COG. What are roughly some of their break-even costs?
Yeah, so they'll tell you it's down in the 20s. They could actually make money. Nobody wants it there, a good corporate return. But you're actually, at 40, they'll make it work.
Mike, what's the biggest misperception right now with oil prices lower? Is it in the oil services, or is it actually in the big integrateds, and that they're actually, in other words, people actually may be going too far to be bullish on integrateds here because the free cash flow yields are nice? Where would you rather be?
Yeah, we prefer being in the E&P stocks, the guys that actually have the acreage, that have the properties. And I'll tell you, I mean, I've been going around seeing accounts here the last day and a half. It's almost at, hopefully, the point of capitulation. The sentiment is so bad around the space. It's disastrous. And we've got names that are actually trading now close to blow-down values. If you fired everybody at the company and just let these wells pay out, and that's never happened. I've been covering the space for 12 years. You never see a good resource player get to that level.
How much of a buyout premium is in some of these names? What we've seen is Chevron, Exxon, call it Occidental. They want the acreage. And we've seen some deals. Is there going to be some kind of a floor on some of these names? Just from, if they keep falling, there's going to be a deal premium baked in.
Yeah, this is basically, I don't know if you were sitting in my last meeting, Brian, but this was a lot of chatter on one big name out there in the Permian right now, Endeavor. It's a private company. The thought is it's a $15 billion transaction that's coming down the pipe. It would be around $40,000 an acre priced in. You got names that are traded at half of that on a per acre basis. So that should, kind of slap you around like, hey, if Exxon's here and is actually going to pay that, we should value some of these companies, a Diamondback, a Parsley, a Pioneer, it's something higher.
There have been a few analysts that have taken down their rankings in Cabot oil and gas. A lot of people talk about valuation being a little rich, 15 times earnings, but the price target still 27, 28. Is that what you're looking for? Because I think the stock is trading around 23 now.
Yeah, and I'll tell you what, newsflash, gas is at like 450. And that's a gas company. They're going to generate about $600 million of free cash flow in Q1. It's insane for a company with an enterprise value under 10. So it's one that we love it even more right now where gas prices
That's a good point, because some of these have both things, because when you drill for oil, you often get gas coming out of it as well. Is the street undervaluing any of the gas assets of some of these companies?
I don't know if I'd go that far. I think Cabot's best of breed. The productivity of their wells is 2x everybody else. But right now, I mean, you have in the Permian, there's so much. Gas is the byproduct. 2 weeks ago, gas was selling at 0. The guys would actually
pay you to take it away. Yeah.
Got it.
If you can get it out, you're good. Yeah. Mike Kelly, Seaport Global Securities, Concho, Diamondback, Cabot Oil and Gas. Good to see you, Mike. Thank you very much.
Thanks, gentlemen.
All right, guys, listen, this has been a space, to Mike's point. I mean, listen, investors have been burned. Well, they've given up.
I mean, listening to him say this is as low as he's seen in 12 years when what we went through in 2014-15 is really extraordinary. I think if you also look at the big cap integrated names, the free cash flow yields are impressive. I think MLPs are also very interesting here. I think the yields are interesting. I think a lot of these projects are already funded and the production growth is there. I like MLPs.
We play a game. We play a lot of games on the show, but one we play with is
Would
the
you
duck.
rather?
No.
Oh.
The one with the duck where you shoot it if you want it, and then the target. Remember that game? And Melissa looked at me and said, "What do you think about ExxonMobil?" And I said, "You got to let that fly away." And you got all my grill. Probably correctly.
Oh, I did.
Yeah, you did.
Oh, sorry.
But I think Exxon, listen, I understand
So
all the
rare of
stories,
me.
but I think there's a real good chance that this retests the low we made back in March, $72.5, $73. So in terms of the big cap integrated names, I would avoid them right here.
Well, the oldest producer of the Permian is Chevron. A lot of people don't realize that they've been there for a long time. Occidental's been there for a very long time.
Those free cash flows are tough to deny.
You got to watch the debt levels. That's the real story. Oil and gas is a debt story as much as anything else. All right.